G'day folks, and welcome back to a Check Onchain update for the 20th of September. Well, we've finally got some green candles. I mean, I don't know about you, but this is a really nice relief. I don't really care what direction it goes, to be honest. I just want the market to do something. So I'm kind of thankful that we have something to work with, right? A bit of volatility, a bit of momentum. But of course, as we start to move, the question is this a real rally? Is this something we should just fade? You know, how do we think about this kind of market structure? So this one's titled "We're Close, Folks," because it really does feel like we're close. And what I mean by close is that we're getting to the end of this chopsolidation. The market appears to be ready to do something. I think we've been here long enough, and you know, in many ways, the direction appears to want to be up. So what we're going to do is a bit of a health assessment and really understand if this rally really has the legs that it needs. So the first thing I'm going to start with is looking at the full tank of gas. And ultimately, this is kind of the final nail in the coffin for chopsolidation. Thank you for your service. You've done a fantastic job, but thankfully we can probably put this one back in the box in the very near history. So, you know, I mean, chopsolidation has been a fantastic framework, but I do believe that we're getting very, very close to not requiring it, at least for the time being. Now, I want to assess this from the on-chain side. Think when you hear on-chain, think spot, think really the healthiest side of the market. The ultimate foundation, I believe, is in that spot on-chain market. We then have the leverage layer that sits on top. Now, this is going to be futures, and I'll take you through what I mean by the leverage assessment. But ultimately, this is going to affect the short term. So really, the way to think about this report, on-chain is the medium to long term. And by medium, I'm talking about like the next 3 months plus, right? We're not talking about 6 months, probably next 3 months. On-chain is really the healthy side of the equation. Leverage is going to be the stuff that creates volatility intraday, creates, you know, down swings and pullbacks and all that kind of thing. So for on-chain, think longer, medium term. For leverage, think literally next couple of weeks type dynamics. So without further ado, let's get stuck right into it. Okay, so I want to just quickly start with the price chart. And if I was to describe this 6 months in really one phrase, it would be choppy, but structured. We have really been within this channel, and this channel has served, at least for me, this channel has served me very, very well in terms of just keeping things grounded. All of the excursions that we've had down on the downside have been more or less bought up, right? Here's the yen carry trade on the 5th of August. For the most part, we have stuck within this particular trend. Now, we're coming up to the top level here. Now, something I just want to really flag is essentially if we get above 65.3, we're more or less setting a new technical higher high. We've been setting on a daily basis these macro lower highs and lower lows. Here we potentially have a higher low relative to the August low. And in theory, we already have a daily uptrend, but if we get above this level here at 65.3, we technically will have a weekly scale reversal, right? So if we have a look at this thing on the weekly chart, I mean, this is just a beautiful and structured pattern, and it really does look like it wants to reverse back in the other direction. And in terms of where we are in the monthly, this is the aircraft carrier, not the speedboat. We are in a monthly uptrend with very tight, large wick, big buy side, very tight sideways consolidation. So really the monthly scale uptrend looks like it wants to resume. That's the aircraft carrier that wants to keep going higher. We've had a whole bunch of daily swings on the inside of that, but ultimately it's starting to look like that monthly uptrend wants to kick back into gear and take over. Now, to really support this, and as you've probably worked out, the Choppiness Index is where chopsolidation got its name from, certainly the first half of it. Now, what we've got shown here is the weekly and the monthly, weekly in red, monthly in green. Now, for those who may not have heard this metric before, let me just reiterate what this thing is. And I'll take off the weekly just to simplify everything. This is the gas tank for Bitcoin to trend on a monthly basis. Now, what you can see is that we've spent 6 months chopping sideways. And what this has done is it allowed investors to reacclimatize, reset expectations, to essentially refuel the gas tank. The market can't just keep going up forever. It needs to take a break, have a rest, have a breather, because eventually it just gets exhausted. So when we got to this very low level here, this is telling us the market is probably unlikely to keep trending on a monthly basis. So what we've then seen is on a monthly time scale is a nice tight consolidation. Now on the weekly, right, the weekly is a smaller component. We can have weekly gas tank is full, gas tank is empty, gas tank is full, gas tank is draining. you've got this process where within the monthly recharge, you can have these weekly swings up and down, left and right. And then of course the daily is then that's all happening inside the weekly. So it's like this, this kind of a babushka doll, right? You've got the monthly is the biggest one. The weekly is inside that doing all of its trending. And then inside the weekly, you've got several bull bear cycles on the daily. That's really how this works. Now, at the end of the day, monthly is very, very healthily recharged, right? At similar levels to we were before the 2020 bull run. So, pretty gassed up. Remember, this is a directionless metric. Doesn't tell us about the direction. The price chart tells me just by and large, it looks like we probably want to go higher. So I think this is more likely to be trend continuation, but we have a full tank of gas on the monthly and we have a full tank of gas on the weekly. In other words, Bitcoin's ready to move. We are ready to move and we have the juice in the tank to do it on a monthly basis. So the next move is probably going to be a fun one, right? I think that's really what this is telling us. Whichever way it trends, it's going to have some serious gusto. Now, probably the most or the closest equivalent to the Choppiness Index in an on-chain world is the sell side risk ratio. Now, we did the masterclass on this recently, so as a very quick refresher, sell side risk ratio looks at all of the profit taking and all of the loss taking and compares it to how big the market is, right? The disturbing force in the numerator, the size of the thing we're trying to move in the denominator. So very, very low values where we currently are. This is telling us that all the profit that was going to get taken has been. All the losses that we're going to get taken has been. Investors need the price to go somewhere. Give me anything else, just not 60,000. If we go back to 58K, I'm going to lose my mind. That's what this is telling us. Investors want the price to go higher, take profits, lower, panic and take losses, right? The market has to go somewhere else. It's exhausted of this range. Or the flip side, we are at equilibrium in this range. That's ultimately what this is telling us. Now, when you get to these very, very low levels, right? Obviously, sometimes it can persist for periods of time, but just note the character here. In bear markets, it tends to persist, right? This is like this bear market recovery can be like this for a long time because there's just not much happening. In bull markets, we tend to get bursts where it goes to a low value and then wants to move, goes to a low value and then wants to move. So I would argue we're probably more likely to see something like that where the next move, we'll start seeing profits getting taken. We did do a report probably a couple of weeks back now, looking at things to pay attention to as this rally gets going, the profit taking and all those things. And we will be revisiting those concepts in the very, very near future. So stay tuned for those. Let me just move myself because I always get that wrong. Okay, so just to close out kind of the big picture on the on-chain, then I want to zoom into the short-term holders. I was talking about choppy and structured. This choppy and structured pattern, right? This kind of decline in MVRV, really, really healthy, right? So we're looking at the MVRV Z-Score. Really, this is this process of investors getting acclimatized to this new cost basis. People are now used to 55K, 58K, 60K. They're kind of used to it now. People's investor cost basis has slowly started to climb. People are more used to this range. Now, I want to compare, we've talked a lot about how this market is very similar to 2019. I can see it here in MVRV, except look at 2019, much angrier, a lot more downside, a lot more violent shakeouts to the downside, still chopsolidation and structured, but this is much, much healthier. This is a different kind of, this could go into a bear market, arguably was a bear market. It has bear market characteristics, but it doesn't look like a bear market, right? This doesn't have the properties of a bear market. This one certainly did. And having lived through both of these, by far and away, 2019 is the closest analog, not a bear market, right? 2019, I would say was a bear market, a mini bear market. This characteristics wasn't. But really the takeaway here, there is no froth. We're coming from a very cool down, calm, collected place. Investors are used to this price range. I'm used to this price range. You probably ask yourself, are you used to this price range? Yes, I'm used to this. Chopsolidation makes us used to this price range. The takeaway here is I think we're coming off a good foundation. I think this is good. From a big picture on chain, I think things are really, really constructive. The market's ready to move. Now I want to jump across to the short-term holders and just assess what's going on at a smaller level. Okay, so with short-term holders, we're in a very interesting situation as we speak, in the sense that at the time of recording, when I was writing the report, we were at 63K. At the time of recording this, we're at 64K. We're literally 63.8 according to my block clock. We are literally breaking through the short-term holder cost basis right now at about 61.8. So we're now through that. The 200-day moving average is at 64K. So I'm just going to go blanket here and say, if we can clear that 64 and get up above that 65, that would be a technical higher high up in the 65, and we clear the 64 to 62 to 64 short-term holder 200-day moving average. If we can clear all of that, and by clear I mean get above it, come back down, retest it, and then move higher from there, we're off to the races. Now, if we look at our current MVRV structure, let me just zoom in on, and by the way, I've just rolled out last year and last 3 months. For those looking for a closer zoom, I'm slowly optimizing those buttons. What I want to highlight here, there's a couple of things to just distinguish why short-term holder behavior, again, doesn't look like a bear market. Look at the depth we get to on a sustained basis in bears, right? 2022, this is people underwater badly, consistently, over and over and over again, just unrelenting downside. People just feel absolutely horrible. Now, this hasn't been fun, but look at the depth we got to, right? We got to kind of the midpoint of a bear market once on the yen carry trade, which lasted 48 hours, right? If you really want to give it that. It was really like a couple of hours at the lows. So ultimately, this doesn't have bear market characteristics. The second thing, we've got this nice positive divergence that we had here in August. Positive divergence, we're in the process of breaking above one. This is a big picture positive divergence, but really this is telling us that short-term holder profitability is improving as we speak. Now we're currently, technically speaking, we're above the short-term cost basis, but it is a range, it's a zone of interest, not a strict price, so don't be too concerned about the exact level. But the thing I want to show you is that as we're breaking through this level of one, something else that's at one is the 155-day average of that MVRV. Now, a lot of words there. Momentum. Is investor profitability getting better, getting worse? When you're seeing your portfolio getting increasingly red, you feel increasingly shit. Now, that's what's been going on really for the last 6 months, right? We've been feeling increasingly shit because the market keeps going lower and lower below our cost basis. All right, now it's 56. Okay, now it's 53. Okay, I guess it's 50 now, right? Now we're looking at the market and going, hey, it was 58. Hey, now it's 60. I checked it today. I was writing a report just then, 63. Holy shit, now it's 64. We're in that process of investors are getting in a better position. So this is really on that right cusp of where short-term holders are going to start feeling a bit better each day rather than a bit shitter each day. So that's really the way to think about this. People's emotional response, their confidence, their willingness to FOMO buy is all going to start ticking higher. So for many of us, if this rally gets the move, right, we start getting some momentum to the upside, we're going to have to start fighting FOMO. It's no longer going to be like, being cautious and waiting for dips and all that stuff. You're going to have to start fighting FOMO as your primary enemy, which is a whole different exercise to itself, right? So we'll be switching gears a little bit in the news that are from that point on. Now, something else to just flag, if we look at the percent of short-term holder supply that's gone from in loss to in profit, it's pretty big, actually. They've gone from pretty much 0% of their supply, right? 3%, 1%, nothing, to over 58, almost 58% of their supply. So that's about 1.9 million BTC. So the way to interpret this chart, so this is short-term holder supply that's gone from in loss to in profit. On the move from our price low up to 63 or 64K, about 58% of the supply of the short-term holder supply, 1.9 million, was acquired in this zone. Now remember, the recovery bounce so far, all of this zone is pretty much still underwater. It's pretty much everything in these last couple of dips, right? German government selling, yen carry trade, the recent dip, 1.9 million coins were acquired down here. Good shit. This is exactly the kind of thing that we want to see. We want to see all these coins that were acquired during this. This is the hodler territory, right? This is where we've been talking about. Be cautious, but also look for blood in the streets. These are the points when we've had blood in the streets. About 1.9 million BTC have been acquired in that zone. So that's good. That puts people in a much more favorable position. And again, more than almost 60% of short-term holder supply, 58%, is now in profit. So they're going to be feeling much better, right? People are going to go from feeling shittier every day to feeling better every day. This is good for sentiment. Now, the last thing on short-term holders is short-term SOPR. Now, this is kind of I don't know how else to describe this. This is one of those things where it's like, you've got to be a little bit discretionary, because strictly speaking, if we just look at short-term SOPR, the character here, I think we can all agree that there's more red than green, right? You could measure it, and I have measured it. There is more red than green in this zone. So technically speaking, should have bear market, and we've been cautious and bearish. Still doesn't look like this, right? So here's like a takeaway lesson, I think, for something to just pay attention to in future dips. The character or the nature and how short-term SOPR trades is really important. Much like MVRV, long sustained periods below 1 means that people are locking in losses, and then more losses, and it's just consistent. People are losing and they're losing and they can't win. They finally get a win, then they lose, right? It's just losses after losses. You've probably experienced this in your life, in some endeavor, somewhere in your life. When you just get L after L after L, it drives you mad. These are short, sharp. We get a couple of people who take the L, but then it recovers. And then we get a short, sharp, and then it recovers, right? There's this like, there hasn't been this widespread, sustained, consistent pain. August 2023. We could have gone into that zone, but we had a short, sharp recovery. This is short, sharp, but not so short. Actually, no, this just sucks, right? That's bear market behavior. And again, it's one of those discretionary things that you just get more used to seeing this chart and kind of thinking about it. Capitulation wicks and undercuts are very, very good. You want to see them in a bull market. You need top buyers to buy the top and then sell low, right? People must buy high and sell low. This is what creates market structure. This is why markets trade the way they do. What you don't want is every man and his dog being like, I got to get out of this thing at any price because it's just going lower. This is pain, fear, concern, no hope for future. This is, oh shit, I bought high. Okay, I'll sell low because don't worry, I'll buy it back later. This is where we step in, right? These are the kind of events, these short, sharp events. So far, this continues to look like bull market character to me. All evidence so far, in my opinion, looks like we are more likely to resume the bull trend. The monthly uptrend remains intact. We've basically seen very little weakness. Overall, so far, so good. Okay, so the very final thing that I want to cover is leverage. Now, this is, as I mentioned at the start, this is going to be in the short-term world. This is the kind of stuff that can upset the apple cart for the very, very near term, right? We can rally and then we can have a pullback. A bunch of people get liquidated, but the uptrend remains consistent. So I don't believe anything we're about to describe here is going to affect the monthly chart. So if all you care about is the weekly and the monthly chart, don't worry about this. This is the kind of thing that can create some near-term volatility, right? We can get up to 66 and then get ripped back down to 60. That doesn't mean this uptrend is over, right? So there will be flashes that come in and out all over the place. This is what's going to create some volatility. Now, what am I talking about? This is futures open interest. And since the 9th of September, really the recent low, we've had about $6.1 billion of open interest come into the market. Now, some of this is just the coin price going up, but a lot of it is actually new capital, new people opening new positions, longs, shorts, they're always matched, but people adding leverage into the system. So I want to just, before we continue, I want to break down that there's really two types of leverage here. The first one is in red, which is the CME. Institutional grade traders, people who are hedging, some of them are gamblers, right? But these are professional traders with big money. They don't get liquidated, they get a phone call, right? They get called, hey, you need to put margin in your account. Like, it's a whole different animal. These are not the kind of guys who, get squeezed out. And, back here, this was all leverage washout. This was degenerate crypto native exchanges, everything except CME, right? So everything except CME, crypto native, perpetual swaps, professional traders, plus complete and total degenerate gamblers. CME, still gamblers, but a much more professional cohort, less likely to be liquidated. So let's just separate those two, because I think we have to think about them separately. So first things first, if we look at CME, they have seen a pretty meaningful uptick in their open interest. In fact, of the new open interest, CME is 60% of it. So a lot of this is institutional leverage. Now, first things first, at face value, that doesn't concern me too much. I think these guys know what they're doing. There'll be a bunch of cash and carry trades in there. There'll be a bunch of yield capturing with the premiums. There'll also be a bunch of guys who are just going long and short, right? They're going to do all these sorts of things. So I'm not too concerned about this, but just being aware that I mean, it's large enough to drive CME's market share from 26% to 29%. So a pretty meaningful uptick, right? Still part of this choppy noise, but it's a meaningful enough uptick that, you know, there are institutional traders in here. Now, we haven't seen a real uptick in volume yet. So you kind of need a bit of volume, I think, to really get this trend going. But, you know, we will see. These things will tend to follow price, right? You need price to not be going down for people to get excited and start jumping in, right? As we can see, volume tends to climb alongside the bull. So this is kind of one of those things that we'll just sit and wait and see. So I'm not too concerned about this, but about 60% of that leverage is coming from CME. Now, the other 40% is coming from our crypto natives on perpetual swaps. Now, you may be familiar with seeing our funding rate, right? This is funding rates. Here I'm actually looking at, I've got these extra traces. These ones are looking at in terms of dollars, because obviously the funding rate is an interest rate. So let's essentially work out if this interest rate's being paid at 8% a year on a daily basis, how much dollar value is actually being paid in premium if it's green from longs to shorts, if it's red from shorts to long. Now, few observations. First one, we had pretty meaningful reset. So, you know, in terms of like, did we wash out all the degenerates? I think so. This is good, right? To be honest, this is actually a really, really healthy reset. So again, put that in the camp of like, overall, this correction has been perfect. I mean, almost perfect. It's really, I couldn't have described a consolidation or a correction at the all-time high. It kind of looks exactly like what we've just been through. So that's 2 thumbs up. In the near term, and I'm talking like, you know, days, weeks, we're now seeing 3.3. This is actually higher than when I wrote the report like 2 hours ago. We're seeing $3.3 million a day in longs paying shorts. Now, what does that mean? People are net long at the moment. So I would expect that we'll get some flush outs, right? Maybe not today, but at some point. We're getting up to the level where it usually finds, you know, bumps its head here or there, and we get a couple of guys get wiped out. It's not excessive. It's not bull market killing. It's just something like, you know, if we get a couple of dumps here and there, don't lose your mind, right? It's going to be part of this process. That's really the takeaway here, right? So don't lose your mind if we trade lower. These guys will probably get wiped out at some point in time. The nature of the beast is these guys go levered long. Their thesis is correct. We're probably going up. They won't be there for it because they're going to get wiped out and then we'll go up, right? This is how these things tend to work. So if we get some volatility, don't panic. It's all part of the process. Now, one thing I want to just close on, we were looking for, I think it was playing with fire that we talked about this. I wanted to see one of these real nice, like short squeezes, get this party going by really squeezing guys out, trying to bet everything. You know, we're going lower. Don't worry. I'll make it all back with one trade. It's finally time to go short. We got it. It wasn't quite the juice and the gusto I would have hoped for. But, you know, we got a little bit of a short squeeze off the bottom. So, you know, again, it doesn't really feel to me like we got a full degenerate wipeout, but again, markets will do what markets will do. So, you know, it's just kind of the nature of the beast. This is kind of what I was hoping for, a real like monster short squeeze. But who knows, maybe if we get back to the all-time high, there'll be a bunch of people who just don't believe it. I think we are probably heading into a disbelief rally. There will be periods where people simply cannot believe that we're going higher. They've convinced themselves that the world's going into a doom loop. They've convinced themselves that we have to have the world's nastiest recession and the Bitcoin's going to zero and, you know, rate cuts will blow everything up. There's all sorts of narratives. It wouldn't surprise me if we go into a real hated disbelief rally. Now, again, all of this, you know, we do have to get above the 200-day, got to get above the short-term holder. We've got to find support. But so far, things are looking pretty good, right? So we've still got that checklist. We want to make sure that happens. But it's hard for me to find too much macro bearish backdrop, right? So overall, maintaining that monthly time frame, this thing will probably correct back to the upside over the long term. We appear to be getting to the tail end of that. So thank you very much, Chopsolidation. You've done a fantastic job, and I'll catch you on the next one. Cheers.